Hi everyone, this is Paul Stewart here from Segmented Solutions, following up on our SSAS Planning Masterclass where we've launched 4 parts. We are getting a lot of questions about general funds and also questions about tax relief, so I thought it would be good to add on an additional part 5, and in this video we're going to look at the general fund versus the members fund and also SSAS tax relief when contributions are made. So here we go, part 5 of our SSAS Planning Masterclass. The first thing to note is that the general fund is different to the members fund, and this impacts not just contributions but also impacts investments and other areas too. So let's look at the scenario. We have a sponsoring employer with 2 directors, and the company's made $700,000 of pre-tax profits, but the SSAS has only got 2 members in it, and as we all know, contributions can be made into a SSAS on behalf of the 2 members. But the amount that can be contributed is driven by factors like 100% of their earnings. And it's important to note here that directors' remuneration, which makes up their earnings, can be 100% SSAS contributions. They don't need to have a salary. They don't need to be on PAYE. This has been tested, and that's the way that it works in terms of tax relief and the tax law. The 100% of earnings is up to £40,000 per year, and there's also the ability to mop up unused years. There's a bit of technical detail behind the scenes in terms of what you can and can't do, but in essence, members can have contributions made and tax relief given to the sponsoring employer. However, in this case, we've got a very large amount of pre-tax profits, and the company's asking, are they really going to be limited in terms of potentially only $80,000 being able to go into the SSAS? And the answer is no. We have this thing called the general fund, and what that does is allows much larger contributions. Now, it's important that you understand this is just for the sponsoring employer's tax relief. It doesn't mean that the individual members can actually suddenly accrue much larger pension benefits. So how does it work? Well, we end up having a members fund and a general fund, and as long as the documentation and everything is correctly noted, the contributions from the employer would be noted inside the SSAS. In this case, with 2 members with $40,000 a year, would be £80,000 going into the members funds, and potentially another $400,000 going into the general fund. So the employer has had tax relief on $480,000 going into the SSAS. However, the individual members' pots are only worth the $80,000. So let's have a look at how this works for investments within the SSAS. So we've got $80,000 of members' funds, and we've got $400,000 in the general fund. And they can go along and they can get a mortgage, and they can beef up the amount of money inside the SSAS. And in this particular case, they've got an additional mortgage, so there's $680,000 available to buy a commercial property. Again, this was from a SSAS with only 2 members, where they were allowed to pay $80,000 in between them. And the commercial property will be generating rent, and that net rent after the cost of the mortgage in this case is £50,000, and that can be allocated according to an investment agreement, and that will allow the $50,000 annually to be allocated to the members funds. Some can be allocated to the general fund. It's really down to whatever that agreement is between the trustees. In that way, the members can benefit from higher investment returns. So let's move on and look at the allocation. What happens to that general fund? If we start off, we've got 80,000 of members funds and 400 of general. Each year, the £80,000 can be added to existing or even new members funds, but it's subject to the income and contribution allowances for the individuals each year. So yes, the pension can have more money in it than it is allowed to have for the members, and it might be that the scheme is waiting for a child to reach the age of 18 to be able to be added as a member of the SSAS, and therefore be able to be allocating money from the general fund across. The key here is that the amount of money needs to be proportionate for the business and wholly, exclusively and necessarily for funding the members of the pension, both now and future members. So that's how it's allocated, and the SSAS just needs to maintain a decent spreadsheet and records to be able to make sure that that is correct. We must stress, just because money is in the general fund does not mean that an individual member can get their sticky mitts on it and take their 25% tax-free cash based on 400,000. That's really important. Okay, so let's move on to the next most popular area, and that is of tax relief. We've got the same sponsoring employer. In this particular case, they're paying 500,000 into their pension, and they can get the tax relief on the full 500,000 in the accounting period, all in 1 year. If, however, they were to make additional contributions which were bigger than £500,000, the tax relief would be spread over 2 years for contributions up to £1 million, 3 years for contributions between 1 and 2 million, and for contributions above 2 million, the tax relief is spread over 4 years. Now, this is actually a complicated area because you can have large companies with existing pension schemes making large contributions. So I don't want to go into too much detail here, but in general terms, for a SSAS which has been newly set up, we can put in £500,000 and get all of the tax relief in the first year. The next question, apart from the actual tax relief, is the timing of the relief. So let's carry on and have a little look at this and how that works. So we've got the same sponsoring employer, £700,000 of pre-tax profits, making a contribution of £500,000. First thing is, you need to understand that accounting works in a particular way. There is an accounting period, so your business year end, for example, may be the 31st of December, and then there's a period of time after that during which your accountant prepares all the numbers and submits the tax return to the Inland Revenue. Normally this is within 9 months of the end of the accounting period. Now, we're often phoned up by people who say they've got to the end of their accounting period and they've worked out that they've got a lot of profit and now they would like to do something about it. Sadly, that means they've missed the boat, because when it comes to pension contributions, they have to actually be made during the accounting period. So if you phone us up and say your accounting period has just ended, unfortunately we can't time travel to go back and make the contribution. Having said that, you can extend your accounting period beyond the scope of this little video, but it's something that we can work with your accountants to assist you with. The important thing is you understand tax relief is given based on the date that the money leaves the balance sheet and goes into the pension scheme, rather than being dealt with after the end of the accounting period as a bit of a mop-up exercise. So, in summary, general funds, really important you get your head around this. They're not just a simple way to get around lifetime limit planning. They're also not a simple way of beefing up somebody's pension contributions without getting an unauthorised surcharge payment. They are for large corporate contributions, and it's more to do with the tax relief for the company rather than what the individual members can or cannot accrue. So be very wary. Lifetime limit planning, however, is done very differently, and yes, of course, we can help you if you have concerns about hitting the lifetime limit. The other thing is, if you run a business and want to establish a SSAS, we've actually got all of the documentation available for you. You can download and type in the forms, fill them in, scan them and get them over to us. That's at segmentedsolutions.co.uk/SSAS. And please don't hesitate to get in touch. In the description below this video, there's a link to a Calendly diary appointment where you can book a free tax consultation, and I would be more than happy as the technical director to talk through any of your SSAS or corporate tax planning issues and see whether we can point you in the right direction. Thanks very much for listening, and goodbye.